Hey everybody, welcome to Mortgage Today for Monday, April 22nd, 2024, and what today it was. UMBS opened up 3 basis points, so basically flat. S&P futures were up 28.5. It's no secret that the vast majority of the bond market movement these days occurs in response to a small handful of economic reports and the Fed's quarterly updates on the rate hike outlook via the dot plot. That means we see several weeks each month without any big ticket market movers. This week arguably qualifies, but how could that be considering that Friday's PCE price index is the same one the Fed refers to as its preferred gauge of the 2% inflation target? PCE just hasn't caused the big reactions for a few reasons. Similarity to CPI and predictability due to other data that comes out earlier, so it hasn't been moving it nearly as much. Chicago Fed President Austan Goolsbee said the Fed is on hold as progress on inflation has stalled out given the strength of the labor market and the progress on easing inflation seen over a longer arc. I believe the Fed's current restrictive monetary policy is appropriate. He warned about housing being a big problem. It is supposed to be falling, he said, citing a decline in the market data on new leases. If it doesn't, it will be hard to see a smooth path back to the 2% inflation goal. Translation, we need to see rents fall in order to cut rates. Lots of new bond supply is also coming this week, which is going to pose some real curveballs. Tuesday, we get a 2-year bond auction at $69 billion. Wednesday, we get a 5-year auction of $70 billion, which is a record. And Thursday, we get a 7-year auction of $44 billion for $183 billion of new supply. When you think about supply and demand, giant amounts of supply, same amount of demand, tough for prices. Bank of Japan Governor Ueda also said that if the underlying inflation continues to go up, they will likely be raising interest rates. Monday may as well have been a third weekend day as far as the bond market is concerned. While equities are preoccupied with earnings, bonds are trading at about half the normal clip based on the past 2 weeks of average volume. There were no relevant economic releases, and really not even any interesting market-moving headlines. Buyers pushed back against modest overnight weakness in the AM hours and then drifted mostly sideways in the PM hours. Days like this only intensify the focus on next week's important slate of events, which include a Treasury refunding announcement, Fed announcement with likely QT tapering on the agenda, and the jobs report. UMBS closed the day ultimately up 15 basis points at 99.47, which is a pretty big win on the day. 10-year ended up at 4.612. So at that price of 99.47, that is putting us up here underneath that Fibonacci line at 99.647, which has been holding up pretty hard and been a pretty tough lid for about the last 6 trading sessions, and we need a lot of help to get up into those better ranges.